What's up, traders? Today I'm going to teach you how to become a swinger. Psych, we're actually going to be swing trading. My name's Hunter, this is Hunter FX, and welcome to my channel. This is the channel where I teach you absolutely everything that you need to know in order to become a professional Forex trader like me. Before we jump into it, I just want to say that this is an incredibly easy strategy. I was actually trading this method some number of months ago, maybe 6 to 9 months ago, and I did it for a few months, and I was making really good profit, 10 to 20% when I was doing it actually properly. That being said, there are a couple things to make sure that you do pay attention to make sure that you do it properly, and I'll go over those very quickly. But this is such an easy strategy, you're gonna have a hard time doing it wrong. So I said that I don't use this strategy anymore, and that's strictly because I get bored not trading. So now I am day trading. I've moved on to bigger and better things, but I still do use the methods that I'm going to show you here in order to develop a higher time frame bias as to where the trade is going to go, where the trend is going, and then that helps me with my actual day trading. So either way, you're a swing trader or a day trader, this info is going to help you. All right, first things first, guys, jumping right into the charts here, I need to explain a little bit of logic behind it first here, just so that you can understand what the reasoning behind this strategy is. And it's going to seem so stupid simple once I explain it to you. That's why I need to explain the logic first. So the first thing that we need to make sure that we know of is how banks basically place their orders. Banks are placing their orders on very high time frames and essentially just placing them where they think price is high and low. They're not using a whole lot of technical analysis to figure out where they want to buy high and low. For example, if we're looking at this chart here, you can probably ignore all of the little drawings I have there. Those are to help me in the future. But the banks basically said, this is the area that we've deemed high, and that's where we want to sell. And then down here is where we want to buy. And they've basically just placed massive buy and sell orders at these levels. So that's why you can see when we see this double bottom here, that's strictly because it's tested the bank's limit orders, bounced off of them, tested them again, and then we've run up for this beautiful rally. And a very similar thing on the top side here is that there was a massive sell order here that the buyers couldn't break down and eventually gave up. And then it turned into this downswing. And then this time we broke through some of that order, and the rest of the bank's orders were layered all the way up before now we're rejecting back down. So that's how you need to understand, that's how you need to think of it. And basically this strategy is going to work in the way where we're going to be front running these banks' orders. So it's quite obvious, you might be able to guess it already, that we're going to look at these high time frames and we're going to look for where the banks are going to be placing their orders, and we're going to put our orders right in front of it. So in this case, we have the yellow line. If we were to look at the charts during this rally, started rallying up, and we said, okay, we know that price got rejected here before. That's not just because of retail traders turning price around. On these major time frames, the only thing that can change the price direction is these major players. So what we can assume is these orders did not get lifted, and there's going to be more behind because people like to layer their buys as to get a better entry as price goes up. So simply what we can assume then is it's going to reject here again or go a little bit past, and I'm sure you see this all the time. Price goes a little bit past the level, stops a bunch of people out, and then reverses the back in the right direction. So this is exactly what happened, and what we would have done is we would have placed our entry right on that level. Now you don't have to actually front run it because we know that it's gonna push past a little bit because this level is now weaker. It's gonna push back maybe 1 or 2 ticks at a minimum. And then the strategy is incredibly simple. All you gotta do, I'm telling you this right now, guys, you're gonna think I'm stupid for telling you this. All you gotta do, target the lows of the range, and then where do we put our stop? Well, it's kind of just random. In this case, The general rule of thumb is I'm going to say never put your stop less than 3R. So in this case, we have nothing else to look back on, so we're just going to place it blindly at 3R. The alternative would be if there was a higher price here, we would put it behind the next level up. I'll see if I can find an example. Alright guys, I found an example here with just another pound pair. Let's assume that this was the range, and if you want to draw the range bottom right around here-ish, that's not as important, but what we can say is when it comes back up here, it's going to wick just a little bit past and then dump back in. And where would we place our stop? Well, the next level up, I would call it right around here. I wouldn't use this one, it's a little bit weak. I would use a little bit higher because that's a stable level. So where would we place our entry? Right on that line, targeting the bottom, and then our stop at the tops of the previous range here. Now that's going to actually give you an incredible trade. That's a 7R trade if it does hit the final take profit, and it would have. Now how do we manage this trade? It's going to be a little bit different. With swing trading, I like to take more profits along the way. And this is I'll explain to you the reason why I say 3R minimum. Is because we're going to be taking the majority of our profit off at the EQ. That's the equal point, the midpoint, whatever you want to call it, the middle of the range. So you can draw roughly the middle of the range here. And I'll tell you that when you're trading this, maybe at least 50% of the time, it's going to go down to the EQ and then it's going to reject and come right back to your stop. So that's why we take off majority of the trade at the EQ, and then you can let the rest of the trade run. I'm not going to tell you exactly how you want to run your trade. I'm actually going to post a tutorial of just how I would actually manage this in a book, in a PDF document, and I'll put it in my Discord. So hit the Discord link in the description below, and then you can kind of read along how I went about this. And I'll show you also the actual logbook that I was taking at the time. And this, remember, this was back when I didn't really know as much as I knew now. This was one of the very early strategies that I was able to come up with that did come out profitable. And I didn't do this for too long, but as you can see, over 60% win rate. I know you guys think I'm crazy. It's such a stupid strategy, but it works very, very well. The only problem I found was the amount of time that you would invest. It was so little in trading that I got bored with it. And the actual return wasn't too high either. So the expected result with how I was trading, I was taking profits along the way. I'm sure some of you will be able to do better, and I'm sure I could do better at this point now that I'm much more advanced as a trader. But what I was saying is, this is so easy, a beginner could do this. And this was basically a beginner trader, and I was making good money this way. And each win was about the same as a loss because I would take off most at the EQ point and some got stopped out. So the EQ point with the midpoint of a 3R trade is 1.5R. So that's the reason why I said you need a 3R minimum, because then your wins are going to be bigger than your losses. And I did take a little bit of profit along the way, so it was roughly about 1 to 1, and I just won more often than I lost. I won about 60% of the time. I said won a lot there. But as you can see, the higher time frames, I did daily just a couple times, but the daily took forever to play out at an 80% win rate. 4 hour, 60% win rate, and the 1 hour, not even worth doing. So I say you have to do this on the high time frames because that's where the major resting liquidity is from these bank orders. So the question lies, how do I still use this to gain an advantage as a day trader for those of you who are interested in only day trading and don't want to use this boring easy mode Nancy boy woman style trading? This is very weak, and you want to be a real man and you want to day trade for some reason like me. Well, basically what we can do is we can determine the range highs here, and we can wait for sweeping patterns like this. So this is Euro GBP. You might be able to look at that if you want right now. And then after we see the price start pulling back in, what we can do Well, just to confirm, what we would want to do is make sure that we go to a smaller time frame and see that it's actually breaking down on levels on the smaller time frame. So that being said, if it just went down here and then bounced straight back up, we wouldn't be biased to short because we haven't actually overtaken any of the moves that we had made going to the upside. We would have to actually break down from this level on the smaller time frame. So we looked at the 4 hour, we see, okay, it's breaking down. So what does that tell us? Now we can see, okay, at the daily, this is in fact a sweep and a reversal. So now you can start looking for shorts all the way back down. And there's really two places I would look for shorts here. It's quite obvious on the daily time frame here. There's this consolidation block, and that could be a target. I've drawn it out there for you. And the next target could be the last high before we made this sweep reversal here. So I've kind of just drawn a magnet there for you, and that's probably most likely the two places it's going to go. Other than that, it could just make a new low. I've marked out kind of X's here. They look like spiders, where there's going to be a lot of less resting liquidity here because it's been tested twice. So we know there's stop losses there, so we know we need to hunt those. So there's really three major places that we would love to target here. And then as you can see, on the day trading side of things, I've actually entered short. So this was actually today. That's why I've got the chart up, and we've broken down from this level, and I entered short right here. Unfortunately, it's coming back on us, so we're still at roughly break even, but I would assume most likely it's going to continue down in the trend, and it's probably got about a 60-70% chance to get to our target down there. There you have it, guys. I made it incredibly simple, and that was a very short video for basically a strategy that might take a little bit more explaining. I will definitely talk about this in my live streams. If you guys have any questions, definitely jump in there, and I'm going to post the strategy that I had used at the time. I think there's a better way to do it now, so please experiment with it. I'm going to post that in the Discord, so you go ahead and give that a read also. And if you haven't, of course, hit the like, hit the subscribe, whatever.